And what a year it has been. Even though Bitcoin has been the best performing asset anywhere, and the top 20 crypto projects have returned an aggregate of 70%, fear seems to be the backdrop of the space, and for the last 3 months, if you've been following the crypto space, you might have wished that you hadn't. But that being said, I think 2020 is shaping up to be a very exciting year for Bitcoin and the crypto space. So let's talk about some of the major driving forces going into this next quarter, and how that will influence the crypto space in 2020. And most importantly, how you should respond to all of it. Welcome to ReadySetCrypto. This is your brain on blockchain. So looking back at the last 3 months, it goes without saying that the biggest impactful events were all related to macroeconomic forces outside of the purview of crypto. A trade war escalation, yield curve inversion, quantitative easing, and the fear of the big one, a recession due to global slowdown in trade. In fact, that was how we finished Q2, with Bitcoin going absolutely parabolic and precious metals being one of the best performing sectors. True, we even started to see Bitcoin referred to as digital gold, much more than a moniker, but actually as a safe haven asset comparable to gold. But unfortunately, the digital gold epithet and narrative was short-lived and even took on a double-edged sword characteristic, as in Q3, many central banks pivoted towards easing of monetary policies, which in turn assuaged fears of a global recession and seemed to turn back time on the doomsday clock. But we shouldn't be fooled, as this central bank raced to the bottom, these negative interest rates. The bill is going to come due eventually. More recently, I believe this explains the catastrophic drops in precious metals and crypto assets, which both had a terrible September, largely due to the fact that the fears of a global recession have subsided somewhat, and even the trade war seems to be put on the pause button. Of course, that's not good for a space that essentially acts as a hedge against the current state of monetary policy. But long term, we should know that this is even more favorable. I mean, this pessimistic narrative of slowing global growth and never-ending central bank stimulus seemed to permeate every news story on the market throughout Q3, and the escalation of trade dispute between the US and China increased fear and uncertainty in the markets in Q3. On August 1st, Trump slapped new tariffs on China, and China retaliated. And yet, despite that, late August and September seemed to cool tensions in the trade war. We can see the interest in trade war drop off almost in tandem with a rising S&P 500. I mean, the Fed, the ECB, the BOJ, and the PBOC are all weighing the consequences of further rate cuts or additional stimulus amid a global economic slowdown. And what's ironic is that we've even begun to question the market's reasoning that such events were inevitable, as economic data began to show mild signs of improvement. Where in July and August we were on the brink of disaster, but fast forward a couple months and now it appears the situation isn't as bad as some people made it out to be. But here's my proclamation. Don't be fooled. The warning signs were there in 2007, and yet many chose to ignore them or pacify them. The recent improvement in key economic indicators in the short term can't fix a system hell-bent on printing money and trying to ease itself off a cliff. Risk to the economic outlook remains elevated despite the moderation in trade spats, which are largely responsible for the decline in capex forecast and growth expectations for many US firms. So, what are we to do? Well, here's what I think. Despite a glimmer of optimism in the broader markets, October is notorious for bearish sentiments in the stock market. But with that anecdote aside, I can see the beginnings of a bigger storm. We're not about to see a true de-escalation of the trade war, nor are we about to see the end of monetary policy regarding money printing. More so than the crypto economy, 2020 is shaping up to be a seminal year for the global economy as well. And through all of this, Bitcoin and the cryptocurrency space have shown that they want to play a hedge against chaos, and rightfully so. But even that aside, I think it's important to stress the absolute magnitude of shifting forces at play here, and that Bitcoin won't always be on the right side of the trend. Instead, it's important to plan for the future by diversifying yourself out of circumstances that necessitate hanging on to one sector or one chart. Plan for the best, but diversify for the worst. The way I see Bitcoin and the cryptocurrency space is an investment in the future, because the technology of a distributed asset ledger combined with the incentive-producing currency is certain to remain with us for some time. The mechanism that allows for great gains in efficiency in many situations in which trust previously had to be delegated to a central arbiter. Although there's no question that governments and central authorities will continue to exist and play a meaningful role in the world's future, much of the current work performed by these governments and other authorities is also needlessly repetitive and mundane. Just as robots and automation are helping the world reduce menial physical labor, so too is cryptocurrency helping us build the tools to automate the menial labor of bureaucracy. Optimistically, the entirety of humanity will benefit as a result, and that I think is a worthy endgame for any technology. So before I end this video, I do want to address one more thing that came up right as I was recording this. We learned that the SEC has rejected the Bitwise ETF application, stating that because, among other things, the sponsor, Bitwise, has asserted that 95% of the Bitcoin spot market consists of fake and non-economic activity, but hasn't established that it has in fact identified the real Bitcoin market, or that the real Bitcoin market is isolated from the fraudulent and manipulative activity. And basically, the SEC was rejecting the most cited research from Bitwise, which asserted that 95% of the volume at cryptocurrency exchanges was fake, instead arguing that its spot prices were derived from the real Bitcoin market consisting of 10 cryptocurrency exchanges. In their opinion, this cherry-picked market displayed relatively low spreads and was resistant to manipulation. For those who need a reminder, the primary arguments the SEC has levied against a Bitcoin ETF application in the past was in regard to two things: market infrastructure and the lack thereof, and market manipulation and the excess thereof. Bitwise was trying to argue that the 10 cryptocurrency exchanges that they identified provided the sort of infrastructure that was needed, and because they displayed what they believed to be legitimate volume, that addressed and solved the issue of market manipulation. And so yes, another ETF application has been denied, which at this point draws more shrugs and eye rolls than anything else. But I want to quickly draw your attention back to that exchange between Bitwise and the SEC. This is the industry trying to grow up, trying to self-regulate, and trying its best to comply with regulation. We are not going to fix the issues overnight, but we're showing regulators and the broader world that the market's matured a lot in just 2 years. We've come a long way from the ICO market of 2017, and people in the crypto space are largely building with regulations in mind. Of course, that's not going to pay dividends overnight, but that's okay, and it speaks to the central thesis of this video. Time and patience are what's necessary right now. We're in this for the long game. We can't expect to eradicate inefficiencies in our space or the broader space simply at a snap of the fingers. It's going to take time and iteration and sweat and dedication, but that's how innovation happens. It's not inventions that change the world. No, it's the ecosystems that get built out of and around those inventions that make things happen. Indeed, a society grows great when people plant trees in whose shade they know they will never sit. So enjoy the rest of the year and find solace in that you're early and part of something bigger than yourself. As always, thanks for watching, and I'll see you in the next one. Cheers.